Hi, I'm Michael Yardney, and today I'd like to speak to you about property strategies for a stagnant or a flat property market. You see, for the last few years, making money from property has been relatively easy. Anyone, even those with little understanding of property investment, could buy almost any property in a reasonable location and sit back as the value of their property increased almost daily. But of course, this couldn't last forever. First home buyers have been forced out of the market due to decreasing affordability, and many established home buyers and investors have been spooked by the general economic uncertainty and more recently by rising interest rates. Others realised that 1.5% capital growth a month just wasn't sustainable. Now, of course, although the long-term trend for property prices in Australia is upwards, growth isn't constant. Concerns about inflation and our fast-growing economy and a mining boom ahead prompted the Reserve Bank to unexpectedly raise interest rates this month and put some speed bumps along the way. Now, before I get into what's in store for our property markets, what's actually happened to our property markets, and my thoughts about how to deal with this market, I'd like to tell you I've actually put all that down into a new DVD program. It's about 4 hours of me teaching you how to build wealth through property investment. At the end of this, at the bottom of this page, you can actually click on a link to buy this program either on its own or together with a fantastic video about the mindsets of successful property investors. I really urge you to get this and understand my approach to the coming times in property. Anyway, over the last few months, our housing markets, they continued to tread water, didn't they? With the latest figures from RP data, it showed that house prices increased 0.1%, nothing really in the September quarter, meaning they've basically not risen since May. In fact, the RP data showed that the national median house price is now $406,000. That's national around Australia, and that's about $9,500 less than at the end of June. During the month to the end of September, the best performing market was Sydney, where prices increased 0.9%, so just under 1% in the month, compared to a rise of 0.5% in Melbourne and 0.7% in Brisbane. Prices in the underperforming Perth market dropped further. They dropped close to 2% in September, while in Darwin they were down just over 1% in September, in Adelaide down 0.8% and down 0.3% in Canberra. Now that's over the last month, over the last quarter, but over the last year home prices were up about 7.9% on a year ago. But in region, that's in capital cities, in regional Australia, prices only rose 2.7%. Now, in annual terms, RP data reported that compared to a year ago, all capital cities rose in value other than Perth, which was down. Leading the way was Melbourne. Melbourne did particularly well in RP data's opinion, 12.7%, followed by Canberra, 11.3% rise. Darwin grew 8.2% over the year, Sydney 9.3%, Adelaide was up 6% for the year, and Brisbane only grew 2.1%. Now, what do these figures show? Well, first of all, maybe I should explain to you what they don't show. And they don't show the segmented nature of our property markets. While the market is less buoyant than earlier this year, good properties are still selling well. They're selling quickly. However, B and C class properties, they've been hit very, very hard. It's clear that the property sector is in the midst of consolidation. Now, that's something I've been predicting for a few months. I saw this coming because finance approvals were falling. That means there were fewer people approved for finance, buyers applying for finance, so there weren't going to be many buyers in the market. But at the same time, more properties are on the market. According to SQM Research, Louis Christopher said that Brisbane had about 50% more properties listed for sale than this time last year, while listings were about 20 to 30% higher in the rest of Australia than this time last year. So with a flat or a stagnant market around Australia, and that's going to be there for the next little while, property investors just are not going to be able to count on strong increases in capital value to produce profits over the next little while. However, it's been said that to be a successful property investor, you should be able to make money under any market condition. And although capital values won't rise as much as they have over the last few years, and let's be honest, in some areas they're probably going to fall a bit, there are still some strategies and techniques available to property investors to beat the market. Let's have a look at what a stagnant market means. Firstly, it means that in a stagnant market, typically you're going to find that there are less buyers in the market. You're going to find that properties take longer to sell. You're going to find property prices only going to increase slowly, and in some areas they're going to fall. There's also going to be more properties sold at prices considerably below the asking price. And you're also going to find more people rent, especially first home buyers who either can't afford to buy, or some of them just don't want to take the risk of taking on a loan under these sort of rising interest rate conditions. And the other thing you're going to find in this sort of market is rents are going to increase and vacancy rates are going to reduce. Now look, at first sight this is all a bit of mixed messages, maybe a bit of bad news, but actually these characteristics provide property investors with opportunities to profit. At this stage of the property cycle, there are more opportunities for property investors because, well, let's think about it. Vendors, sellers are more flexible, they're more motivated, they're more prepared to agree to better terms or better price or both. So now there's going to be some good properties around. Property yields are also going to increase as rents rise because we're at the stage of the cycle where as rising interest rates go up, more potential buyers stay out of the market. You know, it also stops builders from building. This means more tenants and fewer new properties for them to rent. And of course, this leads to higher rentals. But don't be tempted to go for cash flow positive properties because cash flow positive properties actually decrease in value in a rising interest rate environment. But let me just remind you that history shows us that falling or stagnant markets are temporary. The good news for property investors is that in Australia, as our economy continues to improve, and it will, and inflation starts to kick in, and it's starting to, wages are going to increase and property prices will start to increase once more. But it does mean that now more than ever, you just can't buy any property. You can't just rent it out and wait for capital growth. To be successful, you're going to need to buy below intrinsic value in an area that's always outperformed the averages, had good, strong capital growth, and you also should be looking for properties to which you can add value. Now that's not hard to do. You just have to have up-to-date information on values and you've got to do the right research. Buying an established property with a twist below its intrinsic value is a great strategy in today's markets. Now what do I mean with a twist? I mean, I'm talking about what property to which you can add value through renovations or with a hidden opportunity that others have missed. What this means is that to be a successful investor and to take advantage of the opportunities in this changing market, those opportunities that are going to present themselves over the next year or two, it's very likely that you're going to need to take a different approach to the one you took over the last few years. I know some viewers are definitely going to need to do things differently to protect their current property portfolio. Now, as I said, I've outlined my approach that I'm undertaking in this new 2-DVD program called Building Wealth Through Property Investment. I've outlined my views on where the economy is heading, and I've actually spent some time, you'll hear in this as you watch it, with a student of economics, Rolf Schaefer. And we talk about the property strategies that are going to work well over the next 4 years. For close to 4 hours, I explain my successful property approach. If you want to be prepared for this new era, just click on the link below and get this DVD set. And there's also 3 free bonus reports and audios that come with it. Now, if you've missed my recent round of seminars, and I'm not going to do any more till well into next year, click on the link below and order your copy right now. Of course, I'm going to keep you up to date with how to take advantage of the changing markets in future updates just like this. Now, there's so much happening in our property markets nowadays, I'm going to keep you up to date in between my fortnightly newsletter with my blog. So just click the Michael's blog link at the top of this page. Now, and you can subscribe to it. That's a different subscription to my regular newsletter. It gives you short daily updates. I'll be back to you in 2 weeks with my next property update. In the meantime, have a great week. Make it a great week. This is Michael Yardney.